Welcome, it's the Market Sniper back with you. Yes, great news, great news. We have a live trading day tomorrow, by the way, live trading day with us, and there will be a fake number. There will be a fake number that'll come out. Yep, that's what they do. They pump out a fake number on fake number day. It's about the only thing that's factual and accurate. But anyway, so you can join us for that, and we'll be sharing the link in the links right above. But I'm going to be talking to you about my 3 predictions for 2026. 2026, 3 predictions, 3. Magical number 3, the year ends in 6. And number 1 is actually a 6x6. Yes, 6x6, all through 6. That's 3 6s. That's it. We've got to do it. We've got to do it. It's the devil's time. It's the devil's time that is running, doing devilish things. We are talking about 6. We are predicting 6 major Western axis, European, North American, and unfortunately Japan and South Korea get included in that lot as Western axis, although they are out east. Nations to go through the 5.75 to 6% range on their long end charts. That's right. And it's a continuation. So number 1 of our 3 predictions. Let's go a deep dive into it and we'll tell you. By the way, don't forget, tell us where you're checking in from. Tell us what you think. Are we going to get a 6x6? Who do you think the nations will be? Here's my top tips for who I think they'll be, but I think there's fluidity. There could be more than 6. Some of them might make it to 5.75 or 5.5. This one I'm actually asking for 18 months for. So it could happen in the final 6 months, the first 6 months of 27. I think we need about 18 months. Why? Because there's something else that's going to happen next year that'll be part of 2 and 3 that I'll be telling you in a little bit later on. But why do we say that, and what does it mean? And if you take a look at our saucy thumbnail, you'll see the riot police peoples are about. You know, those combat uniforms, you know, those friendly police that are there to protect you. Only you seem to always be on the wrong end of it. Yes, hurty words on social media, but they're never seen when the stabbings are happening, the shootings. Condolences to those out in Bondi Beach recently. More shootings with mysterious shooters, echoing the Port Arthur shootings with mysterious shooters, all that ended up with firearms removed from citizens that make them even more vulnerable. Isn't that funny that? Anyway, condolences to those people. There's 488 of you watching. We need some help. We've had 1,400 recently. We don't want to just speak to 488. We love you all, and you are hardcore fans. Help us bring in the other 1,000, will you? And you do that by smashing the thumbs up. Okay, no more nagging. I don't like that YouTuber type crap. Let's get straight onto it. So why 6 nations on 6? Let's start, given that we were talking about Bondi Beach and the heartache that has to go with one of these events where real people get caught up in the dirty games government state institutions play to secure their agendas. It's a great shame. It's a great shame indeed. Let's pull this away. Let's minimize that so that we can keep just one blotter in view. So we're going to remind you that we were talking about this a long time ago. So history, 2020, we called it on the US. We ran through all the debt markets after we saw the success of our US call, the head and shoulder. The original inverted right up top there. We'll look at the US 10-year and remind you of that. The spill. And we ran the ruler on all debt because our feeling was this was not just a US phenomenon. They are the worst, the largest, the biggest. And they are certainly not the least dirty shirt in the laundry, but that other nations have been synchronized to be in a similar state because those same people that are orchestrating a Port Arthur Mark II shooting up people in Bondi Beach are also, their kin are also managing the financial realm of the world, and they want to slam dunk on all of the Western world. They not just want one nation in empire of decline, the USA. They want to roll up Europe, they want to roll up Canada, they want to roll up Australia, New Zealand, you name it, all of them. The United Kingdom, oh my goodness, all into one big slam dunk. That sees the quality of life, the overall wealth of the citizens be greatly harmed and reduced. That's what they do. That's what they do. They want to take your stuff. They want you to be ward of state. So let's have a look at the Aussie 10-year. This is on a monthly. Let's drop it down to a weekly and remind you. And by the way, to start on the debt markets, it's almost like for many, the most boring thing. But actually, debt markets are the most foundational thing. The minute you start to realize it's about the debt, you start to understand the way the world works a whole bunch more and a whole lot better. It is all about the fact that we are in an unsustainable fiat and debt-based crash. And that, my friends, is the next of it. You can reduce so many of my videos if you just get the one big message. When you get asked a financial question by anybody, you start and you tell them fiat and debt-based collapse. What am I predicting? More of the same, because we haven't emptied the locker. We haven't fixed the problem. We haven't had the final culling. The blood hasn't run in the street, right down the drains. Everybody's slaughtered. Unfortunately, that has yet to happen in terms of a financial context. I fear that there might also be a physical aspect to that as well. I hope to be wrong, but this is pointing to 5.75 as a target for the Aussie 10-year. And we were saying that round here. We were saying this is one of the most beautiful technical setups on the bond market if it bases out here. And it certainly did. After giving us a little bit of a squeeze within a squeeze, you might notice as well, which is very typical of HVF method, which is what we base all our technical trading decisions. And we're having a great old time. All-time highs, accounts, all-time highs. Thank you to the gold, silver markets, HVF method, putting us and sticking to our winners. That's what you can do too to build your wealth so that you're not part of the unlucky ones. You're not part of the massive polarizing into poverty event that the same orchestrators that are orchestrating shootings on citizens to stop people from having even hunting weapons or any form of self-defense as we roll into reset season. We are the people for building wealth in reset, not in traditional financial times. That is not a relevant and useful tool. It's not the kind of times we are in. We are in reset times, not only building that wealth, preserving it, storing it, and protecting it. And the third key point, securing financial freedom and a liberty and a globalized footprint that can see you participate in non-Western countries where you have a better chance of living a better quality of existence. So the Aussie pointing to 576 overall, and it has now triggered. So the key thing about HVF method that you'll learn when you click the link and join us and book a call and decide to build wealth for yourself next year. That's right. It's that time of the year where you think about your financial goals and say, how do I move forward? I'm going to enjoy, I'm going to sit back. I'm not going to be bothered by my boss, but time to think long term. There's some funky business coming down, some real monkey business. There's monkey money and monkey business, and it isn't your circus and it's not your monkeys, but it's going to happen anyway. And you're going to find a lot of chimps on the street, a lot of NPCs, cops with visors that are going to be doing as they told, not having any morality, but doing as they told because the monkeys that pay them monkey money to do monkey things. And you've got to decide, how bad do I want to live in Planet of the Apes full of monkey business? And I'm here to tell you, you don't have to do that. You can remove yourself from that. And this is part and parcel of it. And HVF method warns you that when the triggering event occurs, which is the takeout of the green line, the probability meter of the event occurring suddenly shoots even further up. It's never 100%. Nobody knows the future. But technical analysis, our understanding of debt, fundamentally, it makes sense. Technically, it's absolutely telling us. And we are technical first, but boy, it's also backed fundamentally. And many people weren't talking about Australia debt a year ago when we started talking about this. November, by the way, here's that bottoming out RL3. It's even before November, a year ago. Now, a lot of people are mentioning, hey, what's this going to do to Australia's housing market? Are you still going to pay $1.6 million for a little pandoki of a house in Sydney somewhere? What's the payment on that? It's well through what many people's salaries are about. And as the interest rates get higher, the likelihood of bankruptcy or not being able to make a payment, bad debt is higher. The banks become more conservative. They lend less. They add more charges. They make it really tough for you to get the loan, and they get a lot of the risk on you put up front, etc., etc. So property prices down in Australia. The 6x6x6 prediction, 6 times we say it, all the number 6 is actually very bad for Australian property, and I'm including Australia as one of those that will be in the 5.75 to the 6% range. I'd like to say 2026, but I'm stealing 6 months out of the following year as well, just in case. 18-month prediction. And listen, we could have a demand destroying event and it still happens, because we'll be talking about that as well when we get to 2 and 3 of our prediction. So that's Australia. Sorry, Aussies. Bad news for you. I'm assuming you'd rather hear it in advance and that you'll value that, even though it's not what you want to hear. Rates going up because of debt debasement, loss of value. By the way, 6 Western nations with 6% going up on rates is going to also see further turbo juice into gold, because when people see the reserve asset of debt is not really a reserve asset, never was, just had a 40-year created bull market courtesy of the central banking cartel, was never that exciting on the way up, and the yields were going down and it grinding up. But now that's ended. You don't have something stable. In fact, it lost 55%. Stable, boring things should not lose 55% when the rate spiked from near naught to the better part of where we are already. Well, it's going to lose more on top of that. In short, it's keep on keeping on. The trend, the prediction is more of the same, because we're in an epoch. It's not a year. This is not about year to year. This is about a decade and a half. This is about a decade and a half and a major, major impoverishment event for the masses. That's what you're getting. That's why really this is a prediction. It's a continuation of our 2020 prediction that says you've got 15 years till 35 of just debt debasement, fiat debasement, increased costs for livelihood, and lagging salaries relative to the cost of existence, which is a wealth reducing, disposable income reducing, real impoverishing era. How do you survive it? You make even more money than the prices are going up. How do you do that? We'll talk more about that. But you do the asset things that are going to outperform the fiat debasement. And there are a few, and we have already discussed this and been doing it. You know us as the precious metal bulls. But let's go through 1 or 2 other nations. I won't do all 6. We've also, surprisingly, we'll stay out east, in fact. We've also surprisingly been very, very strong. And as I've mentioned many times, so few people cared when we were doing it. But we highlighted that these rates that were at 0.79 in the long ends of Japanese, we had upside HVFs for them to much, much higher levels. And that this nation is also going to be one that will move into one of the potential players of the 6%. Let's just see if we can get that nailed on and do the draw and show you what we mean by that. So we've said the long end of the Japanese debt curve is also going to go up. You've got to remember that most of the time, Japan was sitting at well below zero, friends. And that's quite an exceptional, well below 1 at 0.79. When this broke out, we're at 0.7. 0.79 was the breakout of this draw. I'm fighting with my draw tool now a little bit. Let's see if it'll eventually give it to me. No. Don't do it. Let's see if it'll do it. Let's do it monthly. Let's get it in monthly. There we go. We're starting to get some things needed to try and change the time frame. Let's see if we can do it one more time. And switch mode to imperfection. Let's do it like that. We got a 6%, slowing me down. Sorry for that. Fast trigger. Let's try like that. Try get it to point in the other direction. It's always when you go live that your tool don't want to play with you no more. There we go. So that's the prediction. Finally, we got the Japanese to go. So we called for 6.8%. It was the most ridiculous thing to say. When the rates was 0.79, we said it's a trigger. You see that 7.9? You see the green 7.9 over here? Let's go TG Pink and show you. We were sub 1. No one cared. It was the most boring market in the world. This is, of course, a log scale. That's why these look so big, because you're at 0.1 up here and you're at about 1 there. But in short, it's been expanded in percentage terms because we're in a log scale. And we showed up and said 6.8% for the 40-year long end Japanese monthly chart. It's the most ridiculous thing until suddenly this started moving and did that, and you have been grinding higher, and you're looking into a rate increase in Japan, Bank of Japan, rate increase. They are going to decree a rate increase. Why? Because the short term relative to their long term has got super, super steep. They've got to do something about it. And the yen was, of course, weakening. And now they're going to put some rate increases on there at the same time as America is cutting. America did a cut and is still potentially going to do a little bit more. And the US 10-year is going up on the cut. The long ends, particularly 20s and 30s, are going even further up than the 10-year. This all while, for the last 5 years since 2020, the average inflation has been 4%. You're sitting just under 3. Your target is 2. So you're 50% over your target. And actually, over the last 5 years, you've averaged twice your target. And you're cutting rates and doing bank-based support repo, not QE. That's right. The banks are bust. It isn't being spoken about enough. The banks are bust, and it is not being spoken about enough. We keep mentioning that. You don't have a debt crisis, a debt and fiat-based crisis, without recognizing that the biggest intermediary and issuer of that debt are the banking institutions, and they're being kept alive. And the Fed is buying 40 billion to keep them and their repo market going. So the likes of the Cayman Islands Ponzi can keep running so that they can still have buyers, inverted commas, buyers for their debt overreach. That's right, because it's not China that's buying more. It's not the other nations that's buying more. It is the Ponzi scheme, the local CIA dark state guys that are running the scam for them in the Cayman Islands. Everything is a fraud. It will all be exposed in due course, but you have to take it from me. It's very much like what CV19 was. Anyway, up, 6.874. You are now at 3.7. You're now at 3.7. It looks less ridiculous now, friends, than it did at 0.79. But let me just still, in case you think it's an easy call, just remind you that's the regular scale. The regular scale. It's still an immense move to go from there to there. In fact, you're probably just over halfway. We're still calling a near double in the rates. A near double in the rates. That's right, a near double. Not quite, but probably 1.8, 80% plus onto the rates. That is what HVF method does for you, and it's what it does for all of us on calling debt-based higher rates. That's why everybody who says bonds are a buy, you know, everybody's become so negative on bonds. You've got to flip when everyone else is negative now. You know, I'm a contrarian. Everyone's so negative debt now. I'm going to be a buyer of debt. Good luck. It's for an epoch. You're going to be negative on debt for a decade. And you're going to be bullish on gold and silver for a decade and a half. That's what's going to happen, friends. This is an entire epoch until you have a complete gut-running, complete fresh start, which, of course, they will be jumping onto and controlling. Those same people that organize shootings in Sydney and Port Arthur and take your guns away in response, problem, reaction, solution, are the same people that are doing the financial manipulation, the hedge funds arranging for them to get special financing, to be buyers of, you guessed it, 8 trillion next year, 2026, debt to be rolled over to 2026, 8 trillion. The largest year ever, 8 trillion. That's right. And they've been pushing it all onto, recently, the short end. All the debt has been pushed more on the short end. So the renewals and the fall-offs, the pulley come back even faster, and you have to re-put it out because the long ends got too expensive in America. The long ends got too expensive. So let's move to America, the fulcrum of the West. Let's go to a 10-year and have a look how much it listened to Jay Powell. Jay Powell said rates must go down. What did the 10-year do? The 10-year went up. Jay, we don't care what you say, Jay. We ain't doing that. The people don't want our garbage anymore. This is another macro setup potentially, and this is it right here. And in fact, on a smaller time frame, we can change color for that. and go with a little blue, and we can say whoop, whoop, whoom. You got a nice little W, and here you go. You might get one more dip, and you are breaking for the upside. Higher rates in America. They're desperate to save the property market, and they're going to put this dovish new guy in once they've got rid of good old JP. JP goes to take a leak, and they pop a new dude in, who is the guy who wants even lower rates. Goodbye dollar. Goodbye dollar. Muchos pampas, Pumpamental Maximus, gold and silver. Bye-bye dollar. You're going to go with the Dove guy now, the Dove guy that thinks you should have done 2 rate cuts, and you put on Moran into the panel, and he wanted a 50 basis cut. Good luck. Good luck watching how the market won't be buying your bonds, even less when you're paying them a lower yield and demanding a higher price, yet the issuance is coming thicker and faster. It's ridiculous. If I sell you one rare Fabergé egg at one price, how is it possible that if I had 1 million of them, I'd be able to fetch a bigger price? No, no, no. Scarcity is part of uniqueness that implies value. And in the absence of scarcity, which is why all your maximalists in digital go, digital scarcity, only 21 gazillion. That's right, 21 gazillion Satoshis. Digital scarcity, that's what they're trying to do. They even know and understand that. You should know and understand that debt is busted. Rates up, property down. Rates up, property down. In nominal terms, and very definitely in real terms, based on gold ounces. Your new measure, gold ounces. So that's a little bit on the debt markets. People don't love debt markets. Let's just do one more, we'll do. The good old United Kingdom. What about that one? There'll be some Europeans in there as well. There'll be the Italians, I suspect. There'll be others. But let's have a look at, in fact, I want to do GB, not UK. GB 10-year. Let's go and see how the gilts, the golden gilts are doing. Well, they've remained stubbornly high. They have remained stubbornly high and will be going higher. Actually, my favorite one that I like to do is the 20-year. So longer term debt, as I say, some instances, the not so long, the 10-year might not have made the target, but this one is already in a breakout. It is paused, it has to be said, and that usually happens when the currency takes a bit of a hit. It is paused for a while around our interim level. The first interim, you can see it here, and it will suddenly ignite, especially if they all go, we really must do this war thing. We haven't got enough meat for the meat grinder. We're going to go do, you know what, a little bit of conscription of the males. It's not in our constitution yet that we can do conscription for females, but don't worry, we'll go and change that. We want to send some pregnant girls to the front to get shot at and come home in chop boxes as well. You know, equal opportunity and all. Yeah, there you are. We are listing here in and around the first interim. That's where we are. And we are telling you 7.5. That's not half shy. Now, again, we might need the full 18 months for that and even a bit more. But we expect that to be done. You got put on ice for a while. Once you met the first interim, you've been stuck in a holding pattern for now, but that won't remain the case. It will ignite again, and 6 is early and easily run. The British rate is at 5.139. We are calling you 7.57 before you rest, and it won't be the end. It can have a spike well before, but at some point, disorderly, it will move up. Hear this now, mark this conversation, hold us against it. You can see and coming back and tell us when is the day Britain runs 6% and then beyond through to 7.57s. So that's a couple of the nations on the 6x6. Let's move on to something a little bit more contemporary for you all. I know you want to see the gold chart. I know you want to see the gold chart, and they totally go hand in hand. Monetary metals will be king again. Hooray, some might shout. Hooray, hooray. We win the Jubilee. That is your silver chart, which is a symbol, much like the gold chart, of fiat and debt debasement. And of course, I will take our draw tool off for a second. before putting them back on in a minute. But just look at that move. And this has been driven by a magnificent technical structure that we highlighted. Here is the Brent Johnson call as we were breaking out of, I'm going to have to call it that from now on. I'm sorry. He's put his name in lights forever on that one. That is the primer of a far larger macro. And as we were coming out and saying, well done, chaps, 25.9 is your entry, and you're going to get disorderly strong at some point in the not too distant future. This was, of course, the bigger setups actual entry at around $30. But had you got in there, you would have got in with a very tight stop. That was your funnel within the funnel. All of this goes to the left and up, and that to the left and bottom. We'll show you it on a bigger time frame in a minute. And at around 26.2, Brent was saying, here comes all the silver boys getting ready to lose their minds for the pilgrimage just through $25. And we said, this time is different, friend. You got this one wrong. You've just written the tweet of the century. You got this one wrong. And it's stopped and chopped at our funnel a couple of times, falling wedge. You got a final slammy, and then boy, oh boy, oh boy, oh boy. Next thing you know, you're sitting at 63.99. Now the cup and handle guys were all sitting and waiting at $50. At $50. The HVF method guys were in at 25.9 because that's what the method said. You're in early, you're buckled up. You make the big money. You made it when it went fast. You weren't chasing in at localized highs like many did around here at 54. And we said you're going to get a pullback because of the 50 level. You've got to have the one more dip, the once, twice, three times a lady before you go. And that sure came. We are now in open territory for very aggressive moves. It's time to take you up to that bigger time frame. The second prediction is monetary metals to do, much like the first prediction, more of the same on an even grander scale. And you're going to be seduced, tempted into everything else. Live trading day tomorrow with me. Link in the comments. You can go into deeper detail with us in our live trading day, which will be crack of dawn as far as I'm concerned, 7:30 UTC -5 time. You can go and book that. Buy 2 and get 3. That means 3 months every time, seeing some of our best and greatest HVF method trades that we discuss in our community. A real opportunity for a trial to see the kind of way we conduct ourselves, what we dig up, how we find it, and how we get to be wealthier despite our investment, on top accelerating our growth immensely. I posted and showed a P&L. This is what you're missing by not understanding HVF method and maximizing on the gain. This is what you're missing. This was a couple of entries. So let's put some numbers to this, what you could be doing. Some of you are already stacking. They say, I like to hear Francis. He tells me to stack. I'm already stacking. It's great news. I like the confirmation. That's all I need. Thank you. Bye. Great stream. Thank you. Thank you. And I'm like, mate, you could have picked up in gold just from Friday lows, a major gift on Mr. Slammy. And I already closed these. I've already closed them and left one. I oversized because I could do a tight stop and say, I just have to hold over the weekend, Asian session Sunday, all this gets fixed. And that's exactly what happened. Just on the gold, 45, roughly between 40 and 45 grand, 3 separate entries. You're talking about 140,000, 130,000 on the gold, another 15,000 on the silver, another 5 on the platinum. That's at the time I took it this morning. It's higher. It's higher. By the time I'd finished blowing it, we'd actually made more. That's it. Bank it, turn it into physical, keep stacking it. You are ensuring generational wealth. For yourself, you owe it to your children. They don't have the financial nous that you have. You are of mature mind and age. You understand this world. I'm helping you to understand it better, I hope. And they have no concept, but they're going to be born into a busted flush captured game. You have to give them the baton of real generational wealth. Otherwise, they will be permanent serfdom for which very little escape is possible to become part of the wealth classes, because this is a polarizing event. That is what the live trading day gives you. How do I maximize and further stack? How do I build P&Ls of 650 odd K on a single account just by maximizing single-based epoch events and adding along the way, scaling it? How do I scale into this that I build real gains? That's what the live trading day starts you on the journey of appreciating and understanding. That's what you stand to lose by not attending. You will be investment good if you're investment, but what if that isn't enough? Because you're going to get a kick between the legs on your house, on your job, on everything. You're going to either get fired, laid off, or given bad salary or crap gains because your company's struggling, because they're having to pay more tax to a government that's struggling because they've been cheating, and they're suddenly it's all catching up with them. They've been cheating you, they've been cheating the fiat, they've been lying, they've been propagandering, and the truth comes home like every chicken comes home to roost. It is coming home big. You need to maximize so that you are unaffected and do not need state-based support. The state-based support comes with conditions, compliance, and criteria, most of which you will not want to comply with, I can assure you. And you've already experienced that. Yes, March 2020 was a compliance test. It was a compliance and IQ test. You needed both courage and intelligence to avoid it. Congratulations if you had both and you avoided that. Well, they've got more. That was your test obstacle. The full course is coming. The full obstacle course is coming. You've got to show that you can show the same level of intelligence and even higher levels of courage, conviction. There is a duality between morality and legality, and they are writing the laws, and what you think will be legal will be detrimental for you, and only morality and only principle will save you in these times. I am here to tell you this. I am John the Baptist, forewarning you of the great Satan that is coming. That is it. Be warned. And you need to understand him. You need to position. You need to fight him. And you need to build wealth. Because if you're not wealthy, you're going to be food line. And that's when you do whatever they tell you to get your next bowl of gruel or goy slop. Don't be in the queue for the goy slop and gruel, because it's a poisoned meal. It's a poisoned meal delivered by evil people. You need your independence, your financial independence, your personal independence, your privacy. You need everything. And you need a food supply chain by honorable people that make great, good food that is naturally sourced. You need everything to be able to be funded by yourself. You need 100% self-reliance in this world, and you need to be around a community of like-minded. This is your unlog scaled silver chart, just so that you can appreciate what has already happened that we told you on this channel would happen. This is the scale of the move. Imagine you go back to those videos where I said, here's your traditional entry, and you're getting a primer here at the $25 entry point. You can get in here, and you are stacking and leverage trading. Let me tell you, your leverage trading accounts are a whole bunch better for it during these periods. You had a stop loss there, you had entries, we could drop time frames, you're maximizing it. Would you have guessed that you would get a chart like that? Would you have guessed that you get a candle like that long, inside a 3-month period? 2 of them, in fact, and you've got one of them that spans, in actual fact, around 46 to 64. 46 to 64. You're talking almost $18. We used to cheer making a 25 cents. $18 quarter. You've just had yourself an $18 quarter. Most people getting inside our HVFs that we were making a fuss about and saying it's the biggest, the grandest of ever, and when it runs, it's going to run like a bitch on heat. It's going to run. Boy, oh boy, oh boy. It's going to have half the male population running after it. It's going to run like you've never seen. And did we disappoint you? Are you feeling disappointed? Are you not entertained? Are you feeling disappointed? I hope not. And let me tell you, you've yet to have your biggest, longest, hardest core candle come. You've yet to have it. It hasn't happened yet. The best is still to come, he tells you. The best is still to come, because that's what we expect. That's what HVF method on balance of probability implies. The best is yet to come. That is what we're saying to you. You have not even had your best moment. Never mind those guys with their visors and their riot police. You will be living in luxury villas away from the rioting peasants, the hungry fools. If you maximize this opportunity, for which you now already have a taste, for which we have provided for you. So let us go and talk some more about silver, because this entire thing resolves at its first major target, but not its final top, at $333. So I'm going to show you how small this pattern looks when you incorporate without the log scale, which you should have, by the way, but we're just showing it for special effect, how it looks. So we are once again going to put that famous number in, 49.81428, 49.81428. There we go. And we're going to stick him in and see if we can get our draw to come showing up. So 91, I say between interims, you run hard, you run with real speed. And you are already in that phase. You cleared the 41 with quite decent aplomb. And suddenly the fundamental news is validating your technical setup. You hear stories. YouTubes are coming out that are saying Samsung executives flew into, wait for it, flew into Mexico to secure huge amounts of supply. And they are paying premiums. Some people suggested $73. Some people suggested all sorts of numbers that are significantly larger, just to get guaranteed supply of silver, friends. And that 333, just so that you know, if you think we aren't courageous and aren't ready to throw out big targets, that 333 is up here. It's up here. There's 333. From that original main pattern break at around 31 and the primer roundabout Brent Johnson's, kind of like Gordon Brown's bottom of selling gold. The Brent Johnson pilgrimage quote, that over there. This is how far you've got to go in percentage terms. This is your silver. And sadly, all other commodities, things that you eat, things that you use, that building companies are also going to be moving. This is your measuring tool. Let's just take it from the Brent Johnson key moment. How wrong will he be in percentage terms on silver? If our target is met, he will be 1,270% out on any shorts he took, if he did ever back an opinion with a short. 1,270% up. That is, friends, 13.7 times that $25. If we measure it from where we are now, it will obviously be slightly less spectacular. And we tell you that we'll only close a portion at this juncture. We will only close a portion at this juncture, and it's still 418%. We're talking 5.2 times still to go at the 60 before you have some respite and rest. And then you go 4 digits and single digit gold silver ratio. We expect this to occur around about 27 on the gold silver ratio, friends. 27 gold silver ratio. We have a downside target of gold down there. Gold will be around 9K, we expect, and silver will be around 333. That's right. And you will have a 27 gold silver ratio. And if you go single digits on that, it's likely gold will go 10, 12, who knows? And single digits means 1,200 silver if you're 12,000 gold. If it's 1/10, so 9.99, you'll be at about 1,200 silver. 1,200 silver at 10, 12,000 gold will be amazing. And if we were to go to 1,200, well, I'm going to have to use the log scale, I'm afraid. It's just too big a move. But let's just measure it from here. What percentage would you be going to 1,200 from here? Well, because we've gone log scale, it doesn't look like much, but you will be back at 1782%. It's almost as if we're back down at the $25 going to 333. That is 18.8 times. 18.8 times. Call it 20 for a rounding error, you could be 20x from your current levels of $64. Your current levels. Do you want to make 20x? What do you think that does to your miners? And it shouldn't be, do you want to make 20x? It should mean, if you don't make this 20x, you aren't going to afford living. The gruel and the slop is part joke, part semi-serious, because some base level powder mix with 3D printed meat, courtesy of Bill Gates and the locust burger. Why do you think these things are being developed? Peasant food, my friends, is being developed because peasant era is a-coming. Peasant era is a-coming. You must decide, do I want peasant food? Don't decide to be rich. Money is money, so what? I don't fascinate overly on money. Do you want peasant food? Do you want a grasshopper? Do you want goy slop? Some lab powder mixed with who knows what? I don't. I want to eat like I do now. I want to be able to afford to eat how I do now. They can charge me carbon credits. I want to throw monkey money at them for their carbon credits. I want to have enough of it that it doesn't matter. So should you. So should you. Pink slime and goy slop. Someone's thrown in the pink slime. That's right. The pink slime, the McDonald's meat. Yeah, you'll be eating your mates that have been chopped up. That's right. That's right. The assisted living and the assisted dying industry will be second provider of steak for you to eat. You'll be eating your mate. I don't care to do that. Anyway, a little bit of fun, a little bit of dark humor. That's what we do. Prices will go up. Other things. So Hartnett, Zero Hedge loves Hartnett. They don't like us, but they love Hartnett. Hartnett says what we say 5 years after we've said it. He says every other commodity is going to start doing what a gold chart is doing. And it's like, bravo, Hartnett, greatest analyst ever, absolutely true. Welcome. Yes, it's called fiat and debt debasement. It's called commodity. We'll eventually roll into a larger commodity inflationary bias, but the best place to remain is gold and silver because it will continue to outperform. And let's just remind people what it's outperforming, because it'll take a while before this guy turns around. It will really be very bad before this guy turns around. That's your oil chart, friends. $84 we said short. It's now 56. It's $56. And people were telling us, oh, you're going to be caught out on that one. Well, we weren't caught out. The gold ratio and the silver rate. Look at it's an absolute stagnating economy, and they want inflation to be masked. What do you think the Rockefeller tax merchants are doing to hide their most obvious trick? They are going to run and take less profits on their oil. They're going to oversupply it, and the demand is down. You're not buying as much on Amazon. You're not getting parcels delivered. Less packaging, less this, less that. Oil down, 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 down. That's your oil chart, friends. That's your oil chart. It's going to be one of the worst of the commodities, but eventually, such will the debasement be. It will eventually start to going up, but that is going to come a lot later. How many times, even Rick Rule, you should be buying Exxon and Mobil. No, you should be buying silver miners. It's an entire epoch. It's bigger than I thought he realized the scale. This is so big. This is quadrillions and trillions of debt that all have to get debased to nothing. And where is all that flow going? In the absence of a reserve asset, it goes to the only other remaining reserve asset, monetary metal, gold, silver, and platinum, to be followed up with it. Not a monetary metal, but a new, very rare, unique properties metal. So that is where you want to play. Don't leave. You're in the best place. And you should be maximizing. You should be taking 6-digit sums out of Mr. Slammy Day, as I've illustrated. Buying that low. I even tweeted it out. I gave it to my community, and then I thought, what the hell? We'll even tell you. You should be buying that low for gold. Gold leads after a hard hit. It ripped. I put most of it in gold. It ripped. I closed it, 90% of it, and now I had an extra little bit more left on. I continue to grow my size and position in a trend that will keep on giving. It's going to keep on giving beyond your dreams. It's going to keep, even when I think it's bearish, it's going up. That's what's happening. I'm not going to tell you it's straight line. There's nothing ever straight line. There's times where you don't want to be wailing in like a clown with leverage. That's why we have HVF method. That's why we have a community. That's why we are maximizing this here. You can be part of it. You can have a try before you buy. Join our live trading day. In the notes coming up right now in the chats, book at call 197 for a visit. We cover cryptos as well for an hour and a half. We will do a full traditional market for an hour and a half, and we will have a short break in between. And you will have access to the recording for an entire month. If you buy 2, you will get 3, and you will have 3 months of access to all 3 recordings. And you can have a try before you buy of a sample update from me, which includes many other things. We'll look at and answer your questions of real possibilities, trades you think you've spotted. We'll talk about what is better, what will give you the greatest return, how you will maximize, tactical entries, fundamental principles, HVF key points of maximization of wealth. That is your duty, not because you just always want to be rich and you're money fascinated, because you don't want to eat the pink slop, the goy slop, the insects that they're going to feed the peasants that can't serve themselves because they got crushed by the insider cartel that organizes shootouts and shoots innocent citizens just to get guns removed, that pulls all sorts of money proliferation tricks. You're talking about the dark state that is evil and considers you part of its ant farm that it can stand on at any time. You need to stand apart from all that. That's what you're trying to do. You need to stand apart from all of that. So that's prediction number 2. Cost of livings. It comes with riots. Industrial metals, you'll see copper inch up, other things, building will go up, but property will lag gold. Property will lag gold. Silver will outperform gold. Miners in silver and platinum will outperform, and even gold miners will outperform gold. But very few other things are actually going to outperform gold. This is this oil chart, by the way, divided by gold, and it shows up the trade we gave long before everyone started noticing how badly oil was doing. That is your oil versus gold. And I will take the log scale off so that you can feel the fullness of how it's underperformed. Down, down, down. We were short that. Long gold, short oil. Look at the crushing performance. Gold has outperformed consistently. Down, down, down. People wanted to call tops. Let's do it the other way around. This has come off this channel on things we have told you about. You need to don't be tempted. There's not a new thing. It's an entire epoch. This is what I mean when I say epoch. It is an era. It is an era of debasement. The 70s weren't even just the 70s. They started when they started that first conflict in 64 in Vietnam. It started then. You're talking about a major move. It went right through the late 60s, right through the 70s. Yes, through Tricky Dicky Nixon, who found out about those difficult people that were plotting against him. Yep, he knows who they were. He made some comments about them. And it went right through the rest of the 70s. It went right into the peak of 80. You're talking not a decade, you're talking a decade and a half at minimum. You're talking a decade and a half at minimum. We called these inverted head and shoulders. People have said, surely now it's going to have stopped. You must be pivoting oil. I said, no, when we meet the target, you'll have a pullback. And then you will continue because it is a reversal. And we told you that down here. We drew the course of the journey down here. Your biggest pullback post the target at 56. You're at 76 today. 1 ounce of gold. 1 teeny weeny little ounce of gold. 76 barrels of oil. Down here, it was 14. Down here, it was 14. The exuberant overreaction to the CV19 lows in oil and everybody switching off supply saw it split all the way up to 129 when gold was still in its holding pattern before it could break to the upside. And the minute gold broke, it was bad news for oil. Bad news because people want a capital preservation asset in fiat debasement times. Debt and fiat debasement, they're the same thing. That's where you are. This is outrunning that last high. It's going through 80. This is a major reversal, and it's already gone to infinity once before. Plus, now you even have the cheating bankers that probably have got long silver and are comfortable with the mainstream media talking about triple-digit silver for the first time recently. When we've been saying 333 for ages, everybody thinks we're nutters. Now they're saying it too. And now they're also saying gold could go to $30. Gold could go even to 20. JP Morgan, Goldman Sachs, imagine that now. They've positioned for it now. Now they're ready to talk their book. Now they're ready to talk their book. We told you before. Because they know by the time they talk their book and they've already got the trade on, you'll be chasing in after them and helping them get rich. We tell you to get rich before them, that their switching of their book makes you richer. We front run them because we're an HVF method. That's what we do. We front run them, but they want you to come in behind them and pump their bags. That's the difference. That's a simple difference, yeah? And it is not mystery oil, the fixed commodity, that lazy age dinosaur bone juice, that we're running out of dinosaur skeletons that have been slowly baked in the core of the earth. Nonsense, nonsense, nonsense. There is no lazy age dinosaur bone juice. There is oil in absolute abundance, and it will continue to be found. There just isn't going to be found $30 oil. There's not regularly $20 oil, no, $10 oil. No, if you want it, you got work to do. You got to pay people for it. After it's had a collapse, it will eventually go up, but not as fast as gold and silver. It will eventually catch up, but the ratios are going to extend. We've had Katusa research, as we mentioned, saying silver's at an all-time high. They've pivoted to silver now versus oil and saying now a silver ounce buys you more than a barrel of oil. A silver ounce, I tell you, will buy you 3, 5, probably 8 barrels of oil in due course, and maybe double digits. That's going to happen. And they said, but, I showed you the trend. Here they made it sound out like there's a range. You're at the top end of the range. Every range must be shorted down at the top end and bought up along the bottom. Nonsense. There is no range. There is a long rounded bottom in the relationship between oil and silver. It is a major reversal. The financial repression of silver has been lengthy. They bullied silver so that they could keep a cap on gold to hide their inflationary policies that was debasing you, taxing you by subtlety and covert. And now they can't do that anymore because they can't spend as much on the debt markets. They're going to come directly. Hence, we taught you tax scavenge mode. And we said when governments no longer have the ability to arrange the same amount of money through debt markets at a reasonable and affordable price, they will come and take from you directly. Tax scavenge mode. You heard it here. You heard it defined. Yes, that's right. Thoughts on platinum, says somebody. Platinum will do grand. Platinum will always do grand. In fact, by the time this whole thing is played out, I expect it to have outperformed gold and potentially even competed with or even outperformed silver. A big statement to make. And we will show you the chart. Platinum. That's how it's pumped since our weekly move. Let's put some things on the dark side there. This is your log scale. This is your weekly. It has just jumped up on its performance. Where were we in July? Let's put the lock on there. From when we called it, you could have got it at 800s. It's now traded at its high point, 1,800. $1,000. You could have bought it at 896. You're at 1,815. It's not far off 100% itself, slightly behind silver now, but I expect a degree of catch up there. By the way, you want more of this? I've got to finish soon. I have other calls to make and actions to do, but I'm here to tell you, you can be part of our live trading day where we will be going over this and more and awaiting the great liar number and the response and the opportunities it might bring on our gold and silver market on the lower time frames, because we are trading continuation patterns on the shorter time frames to maximize our holdings. We're getting lots of little tight squeezes and nice little jog ups to take profits that we turn into further stacked ounces and build our flush trading counts even larger. And then we hold a small part of that position as we continue to expect it to generally move up in a more defensive manner with a deeper stop. That you can do to maximize, and you can find out all about it. People asking crypto questions, please understand There's an update. We are bearish Bitcoin. There was an inverted HVF. There was an inverted HVF on XLM and XRP. We warned it would go down. I will tweet out on that, and we will do an update on crypto potentially in the following week, near the end of the early part of next week for that. We do not see the value in most of the tokens right now outside of XMR, the secrecy token. Francis, home prices versus silver, largest head and shoulders in history, says someone. I don't know where you're getting the data. Is that Schiller Housing Index, I'm assuming? Let's go. Schiller housing. Let's see. Housing. I'm not sure what's the best US housing. Let's see if we just go housing. Housing inventory. Let's try the Schiller again.
Let's say USS FHP, not sure.
USS
FHP.
Thank you. I'm not sure we can get a candle. Can we get a candle? No, only a line. So the thing you want to have a look at on this is you need to divide it by gold ounces. And that's where you get the truth about its real performance. And the chart will look far less well than you think. And that's it right there. So housing is in a major correction. So 1980, when gold last ran, housing came from a ridiculous high point at 68. And believe you me, it was nothing in expense terms compared to today. That was your .com, was the high. And the rally here was your subprime. In truth to gold, housing was more expensive in the .com era in gold ounces because gold was so successfully and well suppressed. I would say you probably had a double top here and a head and shoulders up top there, although you could argue at a mini head and shoulder here and here and there. That brought about that split in housing. That is why, and it's steep, my friends, it's steep because gold is going up steep. Just by holding its price in an environment where gold is running, it is debasing in dollars, in gold ounces, sorry, not in dollars. If it's not appreciating in dollars, it's absolutely guaranteed debasing. And I still think there's room for dollar-based crash, which will mean even further debasement in gold ounces. You will run that low as an absolute expectation of mine. 1980, everybody thinks is the grand dam of bull markets in gold. You are about to witness the grand dam of bull markets in gold, and it is substantially larger because the debt-based fiat collapse is far bigger and larger this time. It is universal, and it's particularly in the West, and the percentages to GDP are far larger than anything you were at in 1980. The US was at about 35 or 40% back then. I don't know, don't quote me specifically. I remember it's that range. You are sitting at 130 today. Everything is bigger. The debasement, the collapse, it's all bigger. It's all bigger. It's so big. This is the defining moment of your life. Economically, it's going to touch everybody. This is huge. It is all you will talk about. There will be people scarred as grandparents in later generation, young kids now, that will be scarred by what they're going through in terms of how they handle money. Much more than the depression of the 30s. It's huge. It is huge. It is so huge. Let me move the chart so that my face isn't in the way. I'm in the bottom left there. Let's move it like that so that you guys can see it. Somebody was referencing that. We apologize. So there you go. Head and shoulder, double top, double top. You don't know. And the only way you avoid this trauma, avoid the trauma. Forget getting rich. Just avoid trauma. Avoid eating bugs. Avoid eating pink slime and goy slop. How about all that? I mean, that doesn't be wealthy enough to be able to get around it. So that's your That is your biblical, says Graham. Yes, he's right, and I mean that too. Buy 90% silver, the best deal in town right now. Appreciation plus spread normalization, a win-win. Plus, you have the fundamentals of absolute shortfalls now, with corporations striking private deals well above spot just to secure supply. I'm just watching this unwind. I've been awestruck since the collapse occurred in 1900 and 1050. This is different behavior. It's the reminders of the 70s, but worse. It is exactly that and more. Silver miners. We've done a lot of the silver miners. I'll just do one or two. We did PAAS, we did KuCoin, we did Heckler, we did all of them. I'll check Heckler just because it's one I do every time. And this guy, as I've said, it's such an erectile projectile. The miners are still being suppressed relative to the metal. So the metal was suppressed. It's now unwinding and catching up. There's disbelief. Now the miners are being suppressed. The only part of the stock market worth owning for me with a high confidence in the current situation is miners. Silver, ideally. Platinum, also good, but gold won't do you any damage either. And those are the safest and best stocks to be contemplating right now. I wouldn't hold Nvidia. I wouldn't hold Meta. I wouldn't hold Schmugel, even though Buffett is wailing in. I wouldn't hold any of those. This is your place. This is your time. This is an epoch. The whole chart is going to be redrawn. There isn't history. You will look back and this will all be a tiny compressed bit of price behavior right at the bottom. It'll be like this. This is how it will be framed. And you'll be somewhere up here and saying, oh, it's having a bad time, oh dear, we had a little bit of a relative low down here. And you'll go, fancy that. I remember when we bought in down here. Look at those little ants down there. You'll be looking down out of your spotter airplane at that tiny little. That's how that chart right now looks compared to where it's going to be. You don't know the scale. I know it sounds moon boyish. It's totally moon boy. It is totally moon boy, and it's driven by real fundamentals. That an entire generation of suppression is unwinding in a short time frame. They actually kept it all down for you to participate in. They kept winding that spring and never letting it go so that you could arrive and get on, to be shot up to the moon. That's right. It's a gift. Some things are a gift. Some things are a gift, and we should accept it for that. Their suppression, their evilness has given you an opportunity. That's the perverse way of the world. It's given you an opportunity to opt out of what they are planning. The surveillance grid, the capture. Okay, I'm going to wrap. That live trading day is coming, and it is coming for you, and it will be available tomorrow morning, 07:30 we start. We will watch the NFP payrolls number come in. We will discuss trading opportunities in far greater specifics than we do here. We will talk about HVF method, what goes on. We will take your questions. We will interact, and we will do an hour and a half of traditional markets, which will be recorded and watchable. You will interact with the other community members, those that are already in the community, as a guest and visitor. And you will be as welcome as anybody else. And we will do the crypto markets for the same time after a short break. And you will be set up for the week, knowing how to focus, and you will see how you will do based off of that. Until next time, thank you very much for coming on. We will be updating on crypto as well in the following week. But generally, we're pretty bearish, but for Monero, there might be one or two others. Till next time, I thank you. We love you. We'll talk more in the live trading day on far greater detail. See you then tomorrow. The payment link is in the notes below. Till next time, bye-bye.